Thank you. Let's send him off with a big round of applause. We would like to start EM Showcase. Bricklayer Asset Management, KK. President, CEO, and Portfolio Manager, Mr. Akito Kusumoto. Please welcome him with a big round of applause. Good afternoon. Bricklayer Asset Management representative and portfolio manager, not Akito, but Akihito. I'm sorry. No, it's all right. We were founded in 2019, and at this moment, Japanese pension funds, foundations, and corporations were receiving funds from them to invest in overseas emission trading. On newspapers, I'm sure you've read or seen this or heard about this. As an asset class, emission trading is quite attractive. Why are we engaged in this? What is our investment philosophy? What is our objective? When we discuss that with our investors, the characteristics of emission trading as an asset class, I point out three characteristics to try to get investors and others to understand. So first, about our investment philosophy. Why do we invest? By and large, your portfolios, I'm sure, are focused on advanced market equities. Equities are typically the return driver for your portfolio, but GFC, Lehman shock, whenever there's a major crisis, equities go down. And with long-short market neutral strategies, still you lose. That's been my experience. For the past decade, even if you lose in equities, in order for your portfolio not to lose, what can you do? So invest in an asset class that does not rely on equities. That's what's needed, I felt. And that is why we have chosen emission trading as an asset class to invest in. As you can see here, equities. The factors behind equity prices, corporate performance going up or down, or business cycle going up or down, or when interest rates go up and down, of course, equity prices fluctuate. So it depends on policy, monetary policy as well. So those are the factors affecting a typical portfolio. On the left-hand side, on your left-hand side, emissions trading. Price fluctuation factors include a government's decarbonization policy, 45% cut by 2050 in Europe, 58% cut by California by the same time. These are some of the policies, and so we're contingent upon government policy. We're not affected by interest rates or interest rate cycles. That is the characteristic. So we are investing in this asset class because our objective is to make an investment that is not affected typically by equities. And our second characteristic is this. We're situated in the middle in this map, Japan. This is a new asset class we're talking about. As a global investment firm, we believe that we can become a leading firm as long as we focus in this asset class. That's the second aspect. So compliance carbon in the state of California in the U.S., that's where our main investment lies, but northeast part of North America, and to the left, European emission trading. We don't have an emission trading system in Japan, so we have to rely on overseas markets to invest. And at the bottom, if you could have a look at the table at the bottom, this is CO2 emission ranking by country. So China, US, India, Russia, and Japan. We're the second largest emissions market among advanced markets because we emit large amounts of CO2 emissions. And US has difficulty creating a federal level emission trading program. So if Japan can come up with one soon, then Japan can be one of the most major emission trading markets in the world, attracting overseas investors. So why not learn in overseas and become a major player in Japan? Lastly, it's easy to invest in. Downside is limited. That is another characteristic of this asset class. When making active investment, if you look at historical return, it may be very good, but every time you have a new investment, your performance deteriorates. That was the case with me. That often happens. But with this asset class, that risk is smaller. This shows California, state of California's emission trading program. So the green line that goes up in steps, these are the floor prices set by the state of California. And the blue line represents market prices. As you can see, market prices never go below the floor prices, except for very few occasions. So this is a rare asset class where there is a floor price. In 2035, the price is to go up by inflation rate plus 5%. So it's almost like having inflation-linked bonds. 2030, the floor price is going to be $37 per ton. Currently, it's $34. Actually, it's down a little bit. It's at $30. So if it can hold until 2030, we will be able to get a return of 4 to 5% per annum. A very interesting, fascinating asset class. Well, if you look at just this, you may think that why not hold TBs, US TBs instead? So let's take a look at this slide. There's a floor price as well as the yield, but upside is very large. What do these two charts show? On the left-hand side, the bar chart shows the emissions that are issued by the state of California. It's going to go down. And have a look at the line graph. These are emissions made by gas companies and electricity companies. They have to purchase emission rights because of their emissions. And you can see the gap between the two, supply and demand. Please have a look at the right. You can see bar charts protruding downward. That means that the emission rights or allowances that are issued are outweighed by demand from those who want to purchase allowances. So downside is limited, and toward 2030, 2040, there's going to be a potential upside because of demand outweighing supply. So I think this is the kind of investment that would not cause trouble on the part of investors. And lastly, as I said, this is an excellent asset class, but unfortunately, it is not recognized as a financial instrument yet. And at this moment, we're actively informing JFSA and other authorities and stakeholders so that this can be recognized as a financial investment vehicle so that it can be invested by institutional and retail investors. We have yet to achieve that target, but with your help, we hope to do so in the future. Thank you. Kusumoto-san, thank you. Please send him off with a big round of applause. Next, Kemuri Ventures representative partner, Mr. Hiroki Okada. Please give him a big round of applause. Good morning, ladies and gentlemen. I'm a bit nervous, I'm afraid. My name is Okada. I'm afraid this is the wrong deck of slides. Can we have my slides up? And could you go? Yes. Let me introduce myself. Moving on to the next slide. Casually, in a softer tone, inclusive of my hobbies, let me introduce myself. I'm from Kanazawa, Ishikawa Prefecture. I live in Kagurasaka in Tokyo. I used the AFS program during my high school days to study in the United States, Mountain View High School in Silicon Valley. I graduated after a year. And at age 20, I traveled to India and I suffered fulcrum hepatitis type A, a designated disease by the country. 90% of people contracting that disease die, but I survived at age 20. My hobbies include trail running. You run in the mountains. Anyone know about this? So 250 kilometers in Sahara in Morocco for about a week, carrying all my food and everything else, and running 200 kilometers in Bhutan, Himalaya, and Atacama Desert in Chile, 250 kilometers, France, Italy, and Switzerland. UTMB Mont Blanc, 170 kilometers. And camping and cooking, I run a food tech fund. And I usually take food where carb is restricted, diving and yachting with wind as a driver. And I just don't want to run in mountains without doing anything else. Vermin control is becoming part of my running hobby. Anyone who's interested, we can join hands. Well, I started off with these casual comments about myself. Hiroki Okada runs a future fund, a future of food fund specializing in food tech. The name is Kemuri Ventures. I serve as representative partner. I graduated from the law department of Waseda University, and after graduating, I joined JAFCO. And we talked about ventures at the time, unlisted companies, and I learned about the standards of venture companies at JAFCO. It was fortunate. And I moved to lifestyle business in Mitsubishi Corporation, engaged in CVC. It says CVC there, but I don't think there's this terminology of CVC that existed at the time. At age 30, I founded my first business. I was in IT and finance at the time, but then I decided to venture into the world of food. At the end of December, we closed a restaurant, Kemuri Kagurasaka. Anyone who knows about this restaurant? Oh, thank you very much for raising your hand. We had lots of guests who were from financial services industry. In 2003, we opened Kemuri Kagurasaka. I was the first proprietor. I was there at the restaurant every day, and I asked someone else to take over. I ran the restaurant for 20 years. And so bringing the common sense of financial services and IT into the restaurant world, food world, people said that it's interesting. So I ended up writing a book. So everything that's important to business I learned in a restaurant. That's the title of my book. 2012, I set up a Shanghai entity, and as a statutory representative, I started a Japanese restaurant in Shanghai. Other than me, all the other staff were Chinese, so I felt rather isolated. It was difficult. So I was the president, the chairperson, the cook, the chief chef, as well as the general manager of the restaurant. As we recruited people, I started to delegate but the performance ultimately went down, so I had to sell and come back to Japan. In China, I was there for 4.5 years. Well, China is a country where it's very difficult to withdraw, but luckily enough, I was able to withdraw from my business. And people were watching as I withdrew from the Chinese market. And at Gurunabi, I was able to set up a new business. Mr. Taki, the founder, together with him, I invested in restaurant tech. And the investment then went very well. It was successful. Can we go to the next page, please? I have 5 more minutes remaining. So Khmer Venture Food Tech Fund. What is the philosophy that underpins our fund? For one thing, we specialize in food tech, and this has to do with the second point. But we invest in companies who have unique tech assets. So pre-1 billion yen, early stage companies, that's our main investees. In Fund 1, we invest in 21 companies. As it turned out, they're all Japanese, and we are now preparing to set up Fund 2. So Japanese domiciled companies or companies overseas who have connections with Japan, these are the companies we wish to invest in. Why food tech? Well, there are 3 factors multiplied into one. For one thing, my strength. And secondly, something that excites me. And number 3, something that has the potential to become profitable. So these were the 3 factors. I ran restaurants for 20 years, and Gurunabi, through such business, I have networks and connections. And secondly, why tech companies? Well, unique technologies can prevent new entrants. It could have high entry barrier. And in terms of stock prices, I think technology companies are better. So with tech, the labor environment of food business should be improved, and profitability as well. Number 3, in the investment world, this is often the case. I love geniuses and oddballs. Well, I continue running 48 hours straight in mountains. I'm considered an oddball. So whatever I do, which is weird, I attract weird people. I make a point in trying to be an oddball myself. But then, of course, you need a balance in the team. So I do focus on having the right balance in my team, as well as variety and varied skills. And capital policy seen in an Excel sheet could appear very beautiful. You can have very good drinks pouring over it. So the corporate culture, corporate philosophy is often reflected in the capital policy. It must have been difficult, I can see, looking at companies' capital policy. So that's the kind of company that I would like to invest in. I don't want to invest in companies who do not have a beautiful capital policy. Investing in a company with a beautiful capital policy with fair value, it will contribute to the ecosystem of the industry. I'm not intent on investing in overvalued companies. And number 5, we want food business to become one of the core industries of Japan. So, staking the rest of my career, I would like to focus on this and make it happen. Now, how did I become independent? In March 2020, right before the lockdown, because of COVID, I made a travel around the globe, and I felt that there are 3 business opportunities for Japanese food. Number 1, well, COVID will be extended, and people around the world will have great interest in health and food. That was one factor. Number 2, Japanese food is good for the body, high quality, very affordable, and could be very competitive around the world, I felt. Number 3, Japanese food has been attracting lots of attention from around the world. For example, Western companies, when they come to Asia for business, Well, they may want to drive sales in the China market, but when it comes to evaluation and brand, they would want to come to Japan to establish that. There's no way they're going to pass over Japan. So because I realized that these are three factors that I can leverage, I decided to found a business. Well, DX is delayed in the food business. Extreme shortage of people is another problem in the food business. So if I waste that time, I will lose the opportunity. So right after coming back to Japan from a world tour, I set up this company. At the time, food tech or fund did not exist, so I decided to do it on my own. So I don't think there's any other company who's running a food tech specialized fund other than ours. Lastly, October 2020, we set up Fund 1, and it invests in 21 startups. Right now, we're preparing to set up Fund 2, inclusive of Funds 1 and 2. I hope to get partnership and cooperation from you. Thank you.
続きまして
Next, Nihonbashi Value Partners, the founder and Chief Investment Officer, Mr. Kentaro Takayanagi. Please welcome him with a nice round of applause. Thank you for your kind introduction. Nihonbashi Value Partners, I'm Takayanagi. Thank you very much for this opportunity to speak to you today. So I founded a boutique firm investing in Japanese equity. It's been 3 years. So investment fund and investment advisors. It's a private placement fund. As a new company, what we are challenging and a passion about investing in Japanese equity, I would like to talk about today. I hope to deepen your understanding about the Nihonbashi Value Partners. Before speaking about the main topic, the Fin City project, I would like to express my appreciation to the Fin City is operating this thing named Independent Business Owners Dojo, which provides support to entrepreneurs. And I attended this and I received a lot of support. And also EMP, the matching with the overseas asset owners is another event carried out by Fin City Tokyo, and some of experiences led to the actual business. So jumping into the main topic, the 2 pages later. So I would like to talk about the 2 things. Why I established a boutique firm, because I thought that the era of a boutique firm was coming. And why value investment for Japanese equity. So investment philosophy, and that is what we are good at. So this is an excerpt from the website. My self-introduction. Before I established this company 3 years ago, I was engaged in investment of a value fund at Nomura Securities. And in 2009, I mean, it started as a domestic investment trust in 2000 and began catering to overseas clients in 2009 because it had a very strong performance. And I had many opportunities, increasing a number of opportunities to speak with overseas investors. And I became attracted to independent managers, independent investment managers. The moment I made up my mind to launch independent asset management company was reported by Nikkei, Japan Economic Journal. I had an opportunity to have dialogues with someone from overseas whom I respect. And this person said that unless it's an independent company, I would not be able to form a partnership. Why? I wondered, but in any case, I made up my mind to launch independent investment management company. Why that is good? Moving on to the next page, I would like to explain that. So, independent era of independent boutique firm is coming to Japan. I thought, first of all, you can have a close communication and easy to understand, straightforward investment, and also skin in the game. In other words, the boutique managers have a deep involvement. Ownership is very simple, or it's easy to shape that type of structure. And also, the third thing is the boutique premium. I don't know if you are familiar with this, but there is an article titled Boutique Premium. So for over 20 years, the performance of independent boutiques and others were compared, and independent boutiques outperformed non-boutiques by 0.62 percentage points per annum. That is what this article said. So you can actually see the faces of the management members. And that is one of the reasons why I wanted to launch a boutique firm 3 years ago. So that's why I explained why I launched an independent boutique firm. So 2 pages later, please. Yes, this one. So investment philosophy and investment methodology. The secrets of making money by investing in equity, I would like to share with you. So I have repeatedly explained this methodology 25 years ago, since 25 years ago. You should find out the companies that are so undervalued but have capabilities. If you can find such companies, then you can make a huge amount of money. When the company turns around its performance, so that is value investment. So the companies that are looked down, undervalued, there is this screening process to find out such companies, fundamentals analysis. So we combine such methodologies. Using this method, I have overcome a few cycles. I'm very confident about this methodology. And investment methodology, what we established newly this time around. The Japanese companies have been upgrading the earnings power, and we are proposing to the clients the funds that have a strong shareholder return. Next page, please. So value investment and the high dividend, the high payout. I don't want to go into details, but for over 10 years, Japanese equity has been very low in prices, but companies were steadily generating profits. So the dividend point of view, broad range of dividend existed, high dividend to a low dividend. That is what this graph explains. And also value investment cycle. I wanted to rethink. In 2021, with the colleagues of my previous employer, I wrote a book or article about value investment is not dead. Next page, please. Why value investment? This is what we do well. So asset management and equity investment, people are very important. Talents are very important. So we are backed by a long-term track record. And there are two things why I launched my own company. Because I thought that there will be an era of boutique firms. Why value investment? It's my investment philosophy, and it is something I am good at. So from two perspectives I have spoken. I hope I have been able to deepen your understanding. In the past 3 years, various people supported us. Thank you very much. And I would like to ask for your continued support. Thank you very much, Mr. Takayanagi.